What's up, my devil? Sensei-tutum here with another video for you. So, another Saturday release. I got to get that Thursday release on schedule, but I had another week where I couldn't get a Thursday out. But Saturday, here we go. And you're actually going to get 2 for 2. I'm going to try to do this decent amount, but one's going to be basically for free, free members, public, and the other's going to be for, the group. This one will likely be educational only, but each week, whether it's EDU and social or whatever, the group video is going to be probably a little longer format, stream of consciousness, try to give you guys everything that I have about it, whereas the maybe you prefer, because I think that a lot of people do, just a short little let me say just count videos that probably I feel like is what people want, more people would like to see, and I feel like have less value, but we'll see going forward here. And if you guys clearly, if the longer format doesn't suit, then we'll switch it up, or we'll see how it goes. Everything, as always, written in sand with old toot. We're looking at the Bitcoin chart right now, but unfortunately for you guys watching this isn't what it's about, but it is kind of. And we'll talk about this briefly before we get into the ES. That's what we're going to talk about, the S&P 500. I like the chart on the ES futures chart. Most data there, a lot of freaking trading volume. So it's where I like to trade it. And the thing that's important about the ES is that, well, first of all, it's the top 500 industrial countries in the that are publicly traded, right? So it has a huge to do with the world and the state of things, but also it happens to be that Bitcoin's pretty damn correlated to it. And Bitcoin sort of leads the S&P, but they're correlated. So briefly, we'll talk about that real quick, just to show, like, for instance, back here, we had this correction, we'll say, between August and September. And then this is Bitcoin, and that's 2020. If we go over to ES 2020, we had August back here. So September and October, or November even here, 2020. So again, Bitcoin leads a little bit by about a month, maybe even 2, for as far as the moves. And then this ended in October, whereas Bitcoin was already, by October, Bitcoin was already on its way. But really, you see Bitcoin didn't get moving until the ES finished, right? So yeah, they're pretty damn well correlated. And when the ES really moves, the Bitcoin really moves. And it's not like Bitcoin's part of the ES. It's just correlated. So this is the most obvious time where they were highly correlated. This was dying because of Corona, and then Bitcoin at the same time was doing the same thing. And realistically, you would think Bitcoin should be a safe haven asset. You would have thought that Bitcoin money would have been running to Bitcoin, but it sort of proved to you that it's not. It's just a speculation at this point, and remains to be so at this moment in time as well. So yeah, we're going to go ahead and talk about S&P, and because it's highly correlated to Bitcoin, and you're getting a lot of Bitcoin out of Sam, so I mean, I'm sure you don't need me, but let me get out a log. So right now, we're just to talk about this Bitcoin chart. I posted this last night for the members, educational probably only, maybe both, but regardless, this is the chart that matters to me. It's just non-log, swing pull, March low, current high. That's your algo money, right? And we're not reacting. We didn't react at that 50. That's pretty significant, right? I mean, here we had the momentum to carry us through it, but we sucked right back up. Lots of buying. Let's go ahead and put the volume on. Lots of buying, right? And when the volume gets high like this, people are like, "Oh, volume's expanding. It's we're fucked now." And that's what everybody was saying back here. That's what I don't want to name names, but anybody that I saw talking about volume. And I remember I actually created a volume video for you guys that maybe I'll redo because I wasn't super pleased with it. How to consider volume in your analysis back then, because of all what I thought was misinformation, incorrect, not intentional, but people that just don't understand volume and the way it works in the markets. And, maybe they have read it but they just haven't had the contextual experience. But contextually, this is what you see, right? Like, we had the buying, we increased volume into the low, but we had the selling climax. Boom. Same thing here. Boom. and a Wyckoff-ian thing, this is the secondary test, right? Selling climax is also a Wyckoff term, but two selling climaxes, secondary test. Each time, look at the volume at the lows. Well, this one's just after. But this is where you see that it just was running totally out of steam. Now, what are we seeing over here? Seeing the same thing, right? So we're seeing volume increase, but look at it here and look at it here. Look at it here and look at it here. Buyers are more accepting of the price at this level than they were before. So that tells me the bleeding is not stopped. That's all you need to know, right? And I've been saying since this was developing, I was telling you guys that, as this was ending in 5 waves at the high of this, and relative 1-to-1 to this, that there are 2 options here. I've been telling you, I've been screaming from the mountaintops that this is a finished zigzag, or was it going to be a 1-2-1-2? And then, I didn't tell you which one of the 2 that I necessarily thought it was going to be. I was hopeful of the 1-2-1-2, but then, when this level breaks, and of course, there's a little bit of ambiguity there because you don't know, is that the low or is that the low? But, anyway, even if we draw it from here, this is the low, but is this the pivot or is that the pivot? But, however you draw it, when this level broke and it became, this was the significance because the retest was short, but then it locked in the scenario where it's very unlikely that this would have been a 1-2-1-2. And at the time when this bounce was happening, people were like, oh yeah, this is the 1-2-1. It's like, yeah, well, no, it's not. And I've been saying this over and over again, so I'm saying it again now, and I'm not going to just keep saying it, but test of summer lows incoming. What do I want to see? When we get down there, I want to see this. I want to see this. I want to see a selling climax. I want to see a strong reaction out of it. And, I want to see exhaustion of the trend. So, is that what we're seeing here? No. So, maybe there's a bounce play. It's just not something I've considered yet at this point, and we'll look at that, but not in this video. So we're already almost 8 minutes in. We haven't even started talking about this, but this is the point of these videos: is I want to give all of the information that I can give you guys, so that the few that enjoy that can get it, and then the shorter videos will be for the ones that enjoy that. So we're going to talk ES and perspective. Now we need to talk about where I've been at with ES and what I've been telling you guys. So We'll reverse all the way to March 2020, and we're going to make this really quick. So from here, at the time, now, I felt that this was an inadequate C wave. Clearly C, right? Let's go to today. So this is a B, A, B, C. Yeah, this is crazy B, right? But it's clearly 3 waves. And this is clearly 3 waves. And this is clearly an impulse wave. And this is at the top. This is back then we were calling this, right? We called this because of this structure. Just like we would have been able to call that Bitcoin that I talked about, right? At the time of this, and it was the same perspective as, there's 2 options, but which way you're leaning. And this was definitely what, I told people about. Anyway, I was more definitive, let's just say, because on the Bitcoin, I was 50-50 on Bitcoin, just because I felt like this made more sense, but Bitcoin sometimes defies your logic, right? So applying logic to the market to markets never works. Whereas here, it was just a little more contextually, it just made more sense because of such a pronounced B. But this, I felt, was short, although it did into the area of the A, which is very, very typical for a flat. I was just sort of expecting more. But in retrospect, it was adequate, quite, because it did exactly what a flat's supposed to do in that regard. Anyway, once we but I felt like it was sort of inadequate because at the time, it was supposed to be a 2 for all of this, and I wanted it to be more, although this is, wave 4 of 1 less degree down here. I kind of wanted to get into that range. And I feel like that would have happened. I mean, there were so many circuit breakers and things like that. And it would have been very fast, right? So it would just been a wick down in here and then back up. So anyway, I felt that we needed to potentially put on an X, and not to mention the price action off that low wasn't exactly perfect, but wave 1s are never perfect, right? They're always ugly, and that's why they're tough to trade. And that's, personally why I like to be in on the pivot as opposed to trying to buy the retrace, because more fuckery in the ones. Just like that Tesla trade where in the video last week, if anybody watched it, I said the best place to be in was at that first pivot, but there was a re-entry position, and that re-entry worked out great as well. It's still on its way. I might even hit target by now. I'm not gonna lie, I got chased out of it on that freaking when everything went super green before it did this red dilly. I got chased out of it in profit, and I like to preservation of capital is my number one goal, not dice rolls. Anyway, moving back to ES, the ones are generally ugly. So now, I was expecting potentially another connecting wave, a 3-wave before another wave down and then up. Well, we got right to moving because the Fed, and I do believe that if the Fed hadn't stepped in and market participants were allowed to dictate price action, that would have happened. Now, of course, the theory has to be able to support the Fed interactions, and it has to a degree, but it does make things a little bit, that artificial injection of liquidity definitely makes things a little interesting. But now I believe that we have clearly put in, we're putting in, it was well long ago that I said, no, this is more of an impulse in play, and that when it retraces, it will be a 2B rather than, a C down to here, okay? And I say 2B, but it would be a 2. So, these levels, retesting these levels has been out of the picture for a long time for me, which is good, right? Because that's 50% correction, and I think a lot of people are probably calling for something like that. I don't know though. I have no idea. But it does appear, and I haven't looked at the macro perspective of this for quite some time, but very basic explanation of the theory. We have a 5-swing move to the high. So I believe we are in wave 2. And I believe we are in the early stages of the wave 2. It appears to be 1, 2, third wave in play. Let's go down. We'll go back up to the large degree to get some relevant geometry on the board. But right now, we're coming into the 1618 relative to the wave 1. So we are, I am thinking that there's a bounce coming, and I think that there's opportunity there from a trading perspective. But, if you, like me, have been sitting in a significant amount of cash in investment accounts, it's not yet. Not yet. But it's coming. Not to say you can't, obviously, start taking bites, but I'm not here to talk about investments. So yeah, I think that we are currently likely, now this could end up being a C wave, right? This could very well end up being a C wave, but this is not the C. This is part of the C. So I would not expect this to end in 3. Best case, most bullish case scenario, 1618 was down around here. We do something like this, and we see that exhaustion that I was showing you on the Bitcoin chart. We see some of that. And then, sort of like it exhausted here, a lot of times in this market, you don't necessarily get that, but after a prolonged retracement, you do. See? Exhausted. kind of the same thing here, exhausting there. And that's not, you know, I'm not talking about in Bitcoin, in any Elliott Wave type of necessarily way, because, you know, so don't think that I'm saying that this is like a C. I'm just saying it's exhaustion. It doesn't, you know, the downward momentum is clearly exhausted. You know, retest the previous low. So I would think that best case scenario, we're going to see something like this. And that would mean that we had like 5 there, you know, something like, I don't know, A, B, C, right? Worst case scenario, this is the high, right? And there's a couple different scenarios, and we're already 15 minutes into this video. I don't really want to get into a philosophical discussion here on the theory. And I don't know that that's necessarily the correct thing to do unless I targeted it to more advanced people. So anyway, I'm not going to get into that. But worst case scenario, it's going to do this. Put in that 3, 4, 5. Oops. And then we'll just walk you out to show you something like that. Something like this, and then we're not in log. And whereabouts does that get us? Right around to the 382. And that is sort of a typical wave 2 in this market, right? They can get very deep, but really once you're getting around the 382 is where you really start to say the high probability retracement is. And then of course they can get still quite deep. So unfortunately it's a wider range, but the probability structure of a wave 2 in this market, as you can see, is quite shallow. So yeah, man. I think that's coming. It's not going to be a straight line. It's going to be, there's going to be significant retracements within there. This will be what we call a bear market rally. It's going to be a bull trap, and then, a bear out of it. So that's how I'm potentially going to trade this. We're at a juncture on all of these charts, Bitcoin, ES, cryptos, where, for me, there's a time where I don't consider bag money very often, investments. This is a time to start considering your bag money, right? This is why we have money in the bag, not just investments, so that we can deploy at times like this. You have to take your own, just like I told you guys at the top of Bitcoin back here. And I can go back and show you the chart that I shared with you guys, but I shared with you, and if anyone took it to heart, they took it to heart. But I said that you need to have a plan for whichever of the two scenarios it is, right? So if your plan was just, I'm going to hold my bags because I'm my horizon is well in the future, then, more power to you there. If your idea was, I'm a little bit worried about this capital and I need to sell here, and I'll get back in and take a loss if it goes, if I'm totally wrong and it's super bull, or maybe your idea, if you did that, you're in a better position now, right? But if you did do that, remember, you got to get back in if that's your goal. If it's investment money, like, you can't just sit on it. So don't forget to get back in as well. It's very important because I've done it, and I've seen it done as well. Is that you get out at the top, and then you just hoard that cash and you never get it back in. So don't forget to do that. Anyway, same thing here. So that's what I see. And I could get into a longer philosophical discussion about the theory and the count here at the high and the structure, but really I would just stick with that. Now let's go ahead and draw some relevant geometry so that we can sort of have what's important on the chart. to identify these swings and things. You know, I'm drawing. I'm over there drawing, but it's not. Those are just. Let's just say there isn't any substance behind those lines I just drew for you. Even though usually they play out pretty close, it's, you know, when you see that, there's very little substance. There was some, you know, on that on the B retrace for the potential zigzag down to the 382. I was, you know, it ended in I drew a fib to it. I used the, you know, I didn't mention it, but I was looking at the SR levels in here that it would be a nice spot to pivot and things like that. But let's just look at some. You want to look at this significant larger scale geometry. This won't give us anything good. It might. It's worth the exercise. Yeah, we're back in 20-year-old pivots back here. Yeah, I don't think they're going to come into play. Just switched over to log, and you can see that this pitchfork, we're back testing the outer parallel. Especially on these degrees, it's always important to check both. So this could support that wave 3 bounce potentially Monday, potentially. Considering the volume structure of this wave relative to others. Just noting to myself that it does seem pretty standard wave 1. Okay, and then of course this line is no longer relevant on log because it was on arithmetic. Let's see. Sort of redraw here for log. Swap the color to blue. So we know it's only relevant when we look at log, and the white won't be relevant unless we're looking at arithmetic, whatever you want to call it. We have a really decent low side trend line that's going to help me out here. Huh. That's actually decent. Okay. That's stacking up on confluence area. Let's go back to it. Arithmetic here. Again, these blues are not relevant on this scale. Yep, that's it. There. Hopefully that doesn't come into play, because that's going to be... No, it's actually right around the... Potentially around the 382, depending. All right. I mean, from this perspective, we're not going to have any significant, support levels based on horizontal support lines until down here, which don't necessarily think we need to start considering those just yet. They're right around the 50. If it does get to the 50 retrace of the March low to now, it'll be strong. But yeah, I got a buddy that likes to say top is in all the time, and normally it's like I fuck with him and say, okay, I guess that means we're going to zero. Like, what do you mean? You never perspective, but at this perspective, the top is in. So yeah, we're putting in a 2. We're in a wave 2, and this market can really get there's a lot of fuckery with wave 2s, and that's why it's just good to have extra cash. Let's put it that way. And from an investment perspective, ladder, just like anything else. Yeah, and there's definitely trading volatility in here. So from a trading perspective, we're going to try to take advantage of that volatility, potentially low degree knife catches. And that's not something I'm going to necessarily share. And then, of course, we're going to definitely, look to short rallies at significant levels, at high probability retracements. And yeah, I think that it could be fun trading. It's going to necessarily be a little scurry. Now, of course, as far as the depth goes, the Fed could always step in. I don't think they're going to let it get to a 50% retracement since 2020 before they step in and, make a statement of some sort, like, well, we're not going to hike rates, or, we're going to continue we're going to stop we're not going to ease the buying. Like, I don't even know if they've I think they're supposedly have begun easing the purchasing. Maybe they'll say we're going to halt our easing of the purchasing, or we're going to increase the purchasing, whatever. It's they've definitely have decreased their leverage and their strength in what they can do, but just saying something with the Fed a lot of time has a lot of weight. So they still, a lot of people say, "Oh, the Fed's out of tools." Yeah, they still have some bolts in the chamber. So we'll see what they do. They could potentially in this sort of at these levels that didn't get to even to that 302 like that. That's probably like the 236 retrace. Now this I'm looking at a log chart, but this is not the fib is not looking log. Yeah, so 236 probably actually, in this market it's always an area to consider. And even then, maybe this fifth, if this third finishes down here, maybe right around that parallel or a little lower, and then fourth comes up and the fifth comes down, 236 could be an area for that A to end, and then again, if that's a C, it'll be over. Or we can retrace and come down again to here. So that's what I'm thinking. Two leading candidates is, if this is a C, right in this area, I'll let you be the judge. The 236 is 4204, and then if it's an A, down here to 236, and that's 3825. And if you're an investor, and your money's in the market, nothing to fucking worry about. Like, if you're in your 30s or 40s, even in your 50s, even if you're 60 and you're not retired for 5 years, who cares? Like, as far as investment is concerned, we're not. This is, I feel strongly, and I could clearly look like a fool here, that this is just a wave 2. I've been over it again and again and again. A lot of people want to say it's the end of times. Maybe if Russia starts World War III, I got egg on my face, but guess what? I got bigger problems. So, it's I think it's a wave 2. unless I'm wrong, and then the world's over. So I think a lot of people think that it is, but I'm not there. You know, I'm not a doomsday prepper. I just live the life I got, baby. So this is 30 minutes in. This is probably going to be EDU social because I didn't get into that higher level concept that I said I wanted to make its own video for. Yeah, so I hopefully stream of consciousness, long video. I know there's a few people that prefer that. And then I'm going to do a short video on ETH here coming up. So, all right, boys, toot out.